Today, we look at capital gain tax and higher purchase transaction. Capital gain tax and higher purchase transaction. Capital gain tax and higher purchase transaction. For capital gain tax purpose, the cost of acquiring an asset or chargeable is cash price of the asset, not the higher purchase price, where the asset is purchased on higher purchase agreement. If we want to look at capital gain and higher purchase transaction, we need to look at it in two ways. First, we need to look at it in the angle of a buyer. Second, we now look at it in the angle of a seller. The first one, which is in the angle of a buyer bought an asset on higher purchase and he paid a total sum of 300. That is the higher purchase price he paid. Out of that 300,000, the cash price is 280, while the interest is 20,000. That makes it 300. Assuming he's buying the asset on cash, he's going to pay 280. But since he's buying in higher purchase, he paid 300. That means the interest element is 20,000. That interest element is not allowed for deduction while computing capital gain. That interest element is not allowed for deduction while computing what? Capital gain. Let me open an Excel for an illustration. Just for an example. I said higher purchase, CGT, capital gain tax, on higher purchase transaction we can look at it in two ways. Capital gain tax on higher purchase transaction, we can look at it in two ways. First, in the angle of buyer. Second, in the angle of seller. Now, we want to look at in the angle of buyer. If somebody buy an asset on higher purchase, after finishing paying all the higher purchase price, he now later sells the asset. He make a capital gain. How do we compute the capital gain? The interest element will not be recognized as part of the cost of acquisition. Let me give an example. Mr. Tunde buy an asset on higher purchase. The higher purchase price he buy the assets is 300,000 for the higher purchase price. Later, the cash price, assuming he's buying on cash, Cash price will be what? Cash price is 280,000. How much will be the higher purchase interest? How much will be the higher purchase interest? How much will be the higher purchase interest? That is 20,000. 20,000 will be the higher purchase interest. The difference between higher purchase price and cash price, that will be the higher purchase interest. Now, Mr. Tunde later, after finishing paying the installment, later sell the assets. Sell the assets at a value of 530. He sold the asset at 530. Now, you know, Mr. Tunde has the asset more than the cost of it. If you want to calculate capital gain tax on this transaction, how do we calculate the capital transaction? We first of all ask ourselves, what is the sales proceed? How much does Mr. Tunde sell the assets? Sales proceed. How much does Mr. Tunde sell the assets? Mr. Tunde sell the assets 520, 530. And with less what? Cost of acquisition. Cost of acquisition. Cost of acquisition. So, ladies and gentlemen, what will be the cost of acquisition of the assets that Mr. Tunde buy the assets? What will be the cost of acquisition? You know, Mr. Tunde buy the asset at a total sum of 300,000. But out of the 300,000, interest element among the 300,000 is 20,000. The cash price of buying the asset is 280,000. We can only recognize the cash price as the cost of acquisition. We will not recognize the interest. We cannot say 300 is the cost of acquisition because that 300 includes interest. We can only recognize cash price. So our capital gain is 250. So your CGT at 10% is going to be what? 10% of 250. 10% of 250, which is 25,000. Which is 25,000. That is the capital gain tax. That means Mr. Tunde buy the asset at 300, but when we are calculating the cost of acquisition, we only need the cash price. It is the cash price we only need. We don't need any other one other than the cash price. So this is a clear illustration of hire purchase transaction. Let's go back to our notes. This is the case of buyer. A buyer that buys the asset on hire purchase. He later sells the asset. How do we calculate the capital gain tax? Let's look at illustration. Let's look at illustration. Example 3. Somebody should help us read. Example 3.
Okay, I will read first.
Okay.
Example 3. Union Company Limited purchased a chargeable asset on hire purchase. The deposit paid for the purchase was 250,000. The balance of the purchase price was to be paid in 36 months installments of 25,000. The cash price of the assets is 790,000. Calculate the capital gain tax due, assuming the assets were sold as follows. A, for 1.25 million after payment of 24 installments. B, for 1.3 million after full payment of all the installments.
Okay. Now, A, after payment, it was sold 1,250,000, 1,250,000, 1.25 million. That is 1,250,000. After payment of how many installments? 24 installments. The question now is, how do we calculate the capital gain tax? First and foremost, the sales proceed of the asset is 1,250,000 less cost of acquisition. How do we get our cost of acquisition now? He has not finished paying the installment before he sells the asset. The installment he's supposed to pay is 36 installments, but he sells the asset after paying 24 installments. That means the new buyer is going to be the one that will complete the payment of the assets. The new buyer will be the one that will complete the payment of the assets. So, how do we calculate? First and foremost, how much is the total purchase price supposed to pay on this asset? How much is the entire purchase price? The cash price, assuming he's buying the asset in cash, is going to pay 790. He's going to pay 790. But since he's buying on hire, they said if he's buying on hire purchase, it will first of all pay how much? 250,000 as a deposit. And he will now pay 25,000 per installment. And he's going to pay 36 installments. So if we want to get the higher purchase price, it's going to be 250,000 plus 25,000 times 36. 250,000 plus 25,000 times 36. We will get let's try to get the installment, the purchase price. Union he paid deposit of 250,000. 250,000. They now agree that he's going to pay higher purchase installments. Installments. These installments include interest. The installment include what? Interest. And the installment, they say it's going to pay 36 installments. 25,000 per installment. Times 36. That is 900. 900. So how much is he going to pay in total? The total is going to pay as total hire purchase price is going to be what? 1,150,000. That is the hire purchase price. How much is the cash price of the assets? Cash price. Cash price of the asset, according to the question, is 790,000. 790,000 is the cash price. 790,000 is the cash price. So if we less 790,000, the cash price, if you less it from higher purchase price, what are you going to get? You are going to
60.
get higher purchase what?
Interest.
Interest. You are going to get higher purchase interest, which is 360. This 360, how much is the interest per installment? Interest per installment. How many installments is he paying for? He's supposed to pay for 36 installments.
36.
36 installments. So let's calculate interest per installment. HP interest per installment. Higher purchase interest per installment. How do we get that? 360 divided by what?
36.
36. That means 10,000 per installment. 10,000 per what? Installment. And how much is he paying installment? The installment payment is paying, every installment is what?
25.
Installment payment is 25,000, Abby. For one installment, he's paying 25,000. Do you agree with me? According to the question, he's going to pay 25,000 per installment. Eh? Do you understand? It is
Yes,
stated
sir.
in the question. Eh?
Yes, sir.
That he's going to pay 25,000 per installment. So, out of this installment, how much is the cash element? Out of this installment, how much is the
15,000.
cash element? Eh?
15,000.
25,000 minus 10,000. That is give you 15,000. The cash installment is what? 15,000. Cash installment is 15,000. Let's go back to the question. Now, we know that the cash installment is 15,000. He now sells the asset after paying 24 installments. He has not finished paying the installment. So, for us to get the cash price he has paid so far, the cash price he has paid so far after 24 installments is what we are going to use as the cost of acquisition. Let's look at it. How do we get it? After 24 installments, the cash price he has paid so far. He sells the asset 1,250,000 after 24 installments. First and foremost, he's going to pay deposits of 250. The installment is going to pay for 24. 24 times 25,000. 600. less interest element, 24 times 10,000, 240. When you minus 240 from 600, it's going to give you what? 360. When you add 360 to the deposit, that means the total cost of acquisition after 24 installment will be 610. We can also say 15,000, which is the cash installment, times 24. We are still going to get 360. We can cross-check. That 15,000 we get. Because 25 minus 10 will give you 15. This 25,000, if you minus this 10,000 from it, it will give you 15. That means 15 times 24 is still going to give you 360. That 360 is the cash installment after 24 installments. 360 plus 250, it will give you 610. Assuming it's the asset after payment of full installment, we don't need to do it like this. What we need to just say is our cost of acquisition is the cash price. How much is the cash price of the assets? How much is the cash price of the assets?
$790.
790. Assuming he has fully paid the installment, we don't need to calculate it like this. What we just need to calculate, the sales price minus the sales price is sell the asset minus the cash price. We get our capital gain and we compute our capital gain tax. But he has not finished paying the installment. We need the cash he has paid for the 24 installment. How much cash, excluding interest, he has paid for the 24 installment so far? He has paid a total cash of 610 so far for the 24 installment. Deposit he paid, that one is cash, plus total cash installment of 24. When you plus the two together, it will give you 610. 610 minus 1,250,000. That will give you what?
640.
640. Your capital gain tax with what? 10% of 640.
64,000.
64,000. So that is after 24 installment. After payment of full installment, full installment is how many installments?
36.
36. He sell the asset 1,300,000 after paying 36 installments. We can do this in two ways. We can use the one we used before. This one we use when he paid 24 installments. We said deposit, installment pay, less interest on that installment. All what you need to do is just to put 36 here, 36, 36. We can do it in that way. Or we should use sales price, which is 1.3 minus how much is the cash price of the assets. How much is the cash price of the asset? Cash price of the 790. 790 is the cash price. Abi? So look at after payment of full installment, 1,300,000 is the sales proceed. The cost of acquisition is deposit. 36 installment is the full installment. 36 times 25,000. Less the interest element. 36 times 10,000. When you less the interest, 360 interest from 900,000, it will give you 540. 540 plus 250 That will give you what? 790.
90.
If you don't want to do it in this way, just say your sales proceeds minus what?
Cash price.
Minus cash price. Since he has paid for the full installment, and we know that the cash price is how much?
790.
790. So our capital gain is going to be what? 510. Abi? Our capital gain will be 510. Why capital gain tax will be 51,000? Any question on this? Any question on this? Any question, any observation? This is higher purchase, capital gain and higher purchase transaction. When a buyer of an asset later sell the asset. The second aspect is capital gain tax on higher purchase transaction. When you sell an asset on higher purchase, seller sell an asset on higher purchase, he make a gain, but the buyer is paying on higher purchase. The buyer is not ready to pay the full payment immediately. He want to pay in higher purchase. Maybe you want to pay for 5 years higher purchase. Though you make a gain on that asset. My question is, are you going to pay the capital gain tax you made based on the gain you make an asset in the first year, or you are going to pay it as the buyer of the asset is paying the installment? Which one do you think is normal? We are saying a seller sell an asset on higher purchase. Take for instance, I want to sell my car, Toyota Corolla. I sold it 2.5 million. Though when I buy it in 2014, I buy it 1.2 million. How much capital gain have I made? I sold it 2.5 million and I buy it 1.2 million. How much is my capital gain?
1.3 million.
1.3 million. Do you understand? My capital gain tax will be what?
130,000.
130,000. But that 2.5 million, I sell it. This buyer said, Mr. Tunde, please, I don't have money to pay at once. So this 2.5 million, I will pay for 5 years. I will pay for how many years? 5 years. My question is, am I going to pay my capital gain tax now? Or I should base my capital gain tax? I should pay my capital gain tax on installment too, as the buyer is paying. Which one do you think is normal?
On installments.
On installments. Because I have not collect cash from the buyer. If I go and pay now, anything happen to the buyer, maybe the buyer the buyer just sleep everlasting sleeping. What will happen to everlasting sleeping? Do you understand?
Yes, sir.
So I can't recover my money again, and I've paid capital gain tax. So the best is I need to pay on installments. I will pay on installments. As the buyer is paying it, I will pay on installments. According to the capital gain tax law, when you sell an asset and the buyer want to pay on installment, if the installment is more than 18 months, that means you pay the capital gain tax too on installment. But if the installment is less than 18 months, you are going to pay the capital gain tax at once. Do you understand my? If the installment is less than 18 months, you are going to pay the capital gain tax once. But if it's more than 18 months, you pay the capital gain tax on installment as the buyer of the asset is paying the installment. That is what capital gain tax law say. Do you understand?
Yes, sir. So I want to clarify. That means if it is installment is 18 months and below, you are paying once. But if it is above 18 months, you can now pay as per the installment.
Yes, you cannot pay the capital gain tax on installment as the buyer is paying the installment. Assuming the buyer want to pay the installment for 5 years, you too will pay the capital gain tax for 5 years. Do you understand? Do you understand?
Sir.
So we will look at illustration as regards to that. Just give me 5 minutes. So let's look at illustration as regards to that. Illustration as regards to that. Illustration 3, page 26. Illustration 3, page 26. Somebody should help us read. Illustration 3, page 26.
Sorry, is it the one on the screen?
Yes.
Okay, I'll help read.
Question 3.
Question 3. Nkwagu Limited sold a plant to Ozonchi on 31st December 2007 for 5.2 million, which cost 3.25 million to acquire on 1st March 2005. The sales agreement provided for payment of an initial deposit of 2.08 million on the day of sale and the balance of 3.12 million payable in 3 equal installments on 31st December 2008, 2009, and 2010. All figures remain constant. Ozonchi made an actual payment as detailed below.
Okay.
Ozonchi died and the balance of 780,000 could not be recovered by Nkwagu Limited as at 31st December 2012. Consequently, the balance was written off as a bad debt with the consent of the FIRS. You are required to compute the capital gain tax payable.
Okay, thank you very much. Now, first and foremost, Ukogu sold an asset to Ozoshi on 31st December 2007. How much is the selling price, sales proceed? How much is the sales proceed?
5.2 million.
5.2 million. How much is the cost of acquisition?
3.25 million.
So our total capital gain tax, capital gains on the asset will be how much? Your capital gain on the asset will be how much? When you minus
1.950.
yes. And the capital gain tax will be what? $195,000.
195,000, yes.
The question is, since Ozoshi that buys the asset is paying on installment, and the installment period is paying is more than 18 months, that means Ukogu cannot pay this as capital gain tax once. He's going to pay it based on the installment period Ukogu is paying. How do we get capital gain tax that he will be paying every year? How do we get it? The amount of installment the buyer is paying every year all over the total sales price times the capital gain tax. Take for instance, this buyer, the first installment he made, the first payment he made was which year?
2007.
Uzoshi made payment, first payment in what? 2007. How much?
2.08 million.
So we want to calculate the capital gain tax that Ukogu will pay on the gain he made from the asset he sold. 2.08 million, which is 2,080,000. All over, what is the total sales proceed?
5.2 million.
All over 5.2 million. Times, what is the total capital gain tax you want to pay?
195,000.
195,000. So that means what you need to do in this case, you can see for year 2007 year of assessment, which is the first year the buyer paid. The amount the buyer paid, 2,080,000, all over 5.2, which is the total amount the buyer is supposed to pay, times 195,000. That means the capital gain tax the seller will pay in 2007 will be how much? It will be how much?
78,000.
78,000. In 2008, how much does the buyer pay? $1,040,000, Abi?
Yes, 1,040,000.
All over what? All over the total sales proceed, which is 5.2 million, Abi? Times
Yes, sir.
195,000. What are we going to get? We are going to get
39,000.
39,000. That means the seller will pay capital gain tax of 39,000 in 2008. In 2009, how much does the buyer pay? How much?
The same 1.40.
Yes. All over, what is the total sales proceed? 5.2 times 195. It's still going to be 39,000. Abi?
Yes, sir.
The next one is what? 2000 and what?
2010.
How much does the buyer pay?
260,000.
Who can tell me how much does the buyer supposed to pay in 2009? According to if you read this side, you will know how much the buyer supposed to pay. Initial deposit of 2.0 million on the days of sale, and the balance of how much? 3,120,000. You know, if you plus 3,120,000 plus 2.8, it's still going to give you 5.2, which is the total sales proceed. This balance of 3,120,000 is going to be payable in an equal installment of 28, 29, and 2010, which is how much is he going to be paying every year?
1.04 million.
1,040,000.
1,040,000. But in 2010, he did not pay 1,040,000. He only paid what?
260,000.
260,000.
260,000. How much will be the balance?
780.
780 could not be recovered. Because in that 2010, while paying the money, he suddenly sleep. He did not wake up again. You understand my point?
Yeah.
Why paying the money? So in this case, he is going to, this 780 is in recovered debt. You cannot recover it. So for us to calculate the capital gain tax, the seller will pay is going to be 260 all over 520, 5.2 times 196. 2010. 2 times 5,200,000 times 195. How much is it going to be? 9,750 will be the capital gain tax the seller will pay instead of how much? Instead of paying
9,000.
9,000.
yeah, instead of him paying 39,000, he paid because the buyer could not pay 780,000. That is the reason why he has to pay that. That is when a seller sell an asset on hire purchase. Any question on this?
So, sir, the 780,000 was written off as bad debt, right? So that means he didn't have to pay the capital gain tax for that 780,000.
Yes, he cannot pay the capital gain tax because he could not collect it from the buyer. Do you understand?
Yes, sir.
So that is what this question is saying. So any question, any issue, any observation? This is it on hire purchase, capital gain tax on hire purchase. First, we have looked at in the angle of buyer. Second, we have looked at in the angle of seller. And we have done illustration. The next heading that we are going to look at today is the next heading we are going to look at today is loss on disposal of chargeable assets. Loss on disposal of chargeable assets. Finance at 2023. What is loss on disposal of tangible assets? Let me give example. Let me give example on this loss of disposal of tangible assets. Look at it. A motor vehicle. Cost of acquisition of that motor vehicle is $480,000. Sales proceeds, when you now sell the motor vehicle, sales proceeds, you sell the motor vehicle $320,000. If you want to calculate the capital gain, are you going to make a gain or loss? Are you going to make a gain or loss?
A loss.
If you minus the cost of acquisition, you minus, which is 480. That means you make capital loss.
Loss of 16,000.
Capital loss of how much?
16,000.
160,000. Since you make a loss, you cannot pay capital gain tax now. It is only you make a gain, you will pay capital gain tax. It is when you make a gain, you pay capital gain tax. When you make a loss, you cannot pay capital gain tax. If you make a gain, Now, what is the treatment of this loss that we make? How do we treat capital loss? According to Finance Act 2023, when the company make a capital loss on disposal of an asset, that capital loss that you make, you can carry it forward for maximum of 5 years. When you make a capital loss on disposal of an asset, the capital loss can be carried forward for maximum of 5 years. What we are saying is you can relieve the capital loss against any gain arising from disposal of the same tangible assets in the future, but you can only carry it forward for maximum of how much? How many years? 5 years. You will now relieve it against any gain arising from disposal of an asset of the same type of assets. In my illustration here, I said the capital loss was on motor vehicle. It is on motor vehicle. So since it is on motor vehicle, if assuming you sell these assets in 2019, you have made a capital loss. The law says you can carry it forward for maximum of 5 years. Let's say in 2023, you now sell another motor vehicle. You sell another motor vehicle in 2023. How much do you buy the motor vehicle that you sell in 2023? You buy that one 1,200,000. You sell it 1,850,000. In this case now, are you making gain or loss? Are you making gain or loss?
Yeah.
You're making gain.
You have made a gain of how much?
A gain of
150,000.
A gain of
550.
550,000.
550, 650.
It's 550.
1.2 minus
Okay.
600. 600.
650. 650.
650.
Yeah.
You have made a gain of how much?
650.
650.
Yeah.
Can you see that?
Yes.
This gain you make, what Financer 2023 is saying that this gain that you make, before you pay capital gain tax on it, you will now say capital loss. Capital loss brought forward. How much is capital loss brought forward? How much is the capital loss?
160,000.
160.
160,000. This 160,000. You will now say capital loss relief. Capital loss relieved. We are going to relieve the 160,000. So your net capital gain, how much will be your net capital gain?
490,000.
490,000. That will be your net capital gain. So what will be your capital gain tax? Capital gain tax.
49,000.
Your capital gain tax, 10% of it. Have you?
49,000.
49,000.
At 10%. That is 49,000. What we are saying is, if you make a capital loss from disposal of an asset, according to Finance Act 2023, you can relieve it against capital gain you make from disposal of the same class of the asset. The same what? Class. Mind you, I made a loss from disposal of motor vehicle. I also make a gain from, they are the same class. So if you make a loss from disposal of motor vehicle, you cannot relieve it against a gain from disposal of land and building. It's not allowed. Do you understand?
Okay. Okay, sir. Sir.
Yes.
This capital loss relief, so it is the amount that they will deduct, not the percentage of the capital gain.
No, not the percentage of the capital gain.
Okay.
It is the capital loss.
Okay.
You can see my illustration.
Yeah, I've seen it, sir. I've seen it.
So you can only carry the capital loss forward for a maximum of how many years?
4 years.
5 years. I said 5 years. I did
Okay,
not
5
mention
years.
4 years.
Sorry,
Yes.
it's capital allowance.
Maybe remember the one Mr. Chris taught you yesterday.
Loss capital allowance. Yes, sorry.
Is it loss relief, Abi?
Yes.
Yes, this one is capital gain. So we have capital loss here. You can only carry it forward for maximum of 5 years. That means
5 years.
you must make that gain within how many years? any gain that you want to relieve capital loss for must be made within 5 years when you make the loss. If the gain is made after 5 years, that capital loss, you cannot relieve it again. Do you understand our point?
Yes, sir.
That is treatment of capital loss. So that is treatment of capital loss. If I update my material, I will give an illustration. By God's grace, this night I will look at an illustration, practical illustration that I will put in this material. I will send you updated. I will have questions relating to treatment of capital loss. Because capital loss is a new area. It was introduced by Finance Act 2023, which it is effective as from 2024 year of assessments. Do you understand?
Yes, sir.
So that is that. The next area we want to go to now is we call it rollover relief. Rollover what? Relief. This is the major area in capital gain tax. So it's very important in capital gain tax. How do we treat rollover relief? What is rollover relief? What are the type of rollover relief? What are the assets subjected to rollover relief? What are the exemptions given to rollover relief? All these, we are going to look at them one by one under the topic called rollover relief. We are going to look at them one by one under a topic called rollover relief. What is rollover relief? Rollover relief simply means deferment of capital gain tax. Deferment of capital gain tax. You defer your capital gain tax to a future date. How do you defer your capital gain tax? When you make a gain from disposal of an asset, you now reinvest the gain. You reinvest the sales proceeds on a disposal of an old asset in purchase of a new asset. When you reinvest the sales proceeds on disposal of old assets in purchase of a new asset, that is rollover relief. A situation where you invest the sales proceeds from disposal of an old asset in the purchase of a new asset. It is called rollover relief. You reinvest disposal of an old asset in the purchase of a new asset. It is called rollover relief. In my write-up, I said rollover relief is granted when an asset of a particular class are disposed and the sales proceeds from such disposal is reinvested in the acquisition of new asset of the same class. What we are saying is, you have a land and building, you have a building, you sell that building, you now use the sales proceeds from the sales of that building to purchase another building in another location. When you make a gain from that sales of old building, that gain, you will not pay capital gain tax on it until you sell the new building. That means you defer the capital gain tax you're supposed to pay from the sales of that old asset to a future period when you will now sell that new asset, because you have used the amount, the sales proceed from that old asset, you have used it, you have reinvested it in the purchase of a new asset of the same class. That is what rollover relief is saying. What are the classes of assets available for rollover relief? What classes of assets is available for rollover relief? Rollover relief does not apply to all assets. According to the Capital Gain Tax Act, which is Section 21 of the Capital Gain Tax, Section 31 of the Capital Gain Tax Act as amended, the following are the classes of assets that rollover relief is available. Class 1 of the assets. Under the class 1 of the assets, we have A and B. Under the class 1, land and building, plant and machinery. They are the class 1 of the assets you can grant rollover relief. Class 2 of the assets rollover relief is available to ship, which is vessel. When you have a vessel, ship, when you sell it, if you use the sales proceeds to buy another vessel, you can apply for rollover relief. Aircraft 2 is the class 3 of the assets rollover relief is granted. While class 4 of the assets rollover relief is granted is called goodwill. Class 4 of the assets rollover relief is granted is called what? Goodwill. And class 5 of the asset rollover relief is granted is stock and shares. Class 5 of the assets rollover relief is granted is what? Stock and shares. Stock and share. Before Finance Act 2023, we have class 1 to 4. But Finance Act 2023, which commenced in 2024 year of assessment, increased the class to 5 by adding stock and share as part of the assets that rollover relief can be granted. Ladies and gentlemen, rollover relief in our advanced tax question, if you have started looking at past question, you will see that virtually every diet question on capital gain tax normally come out. Every diet question on capital gain tax normally come out. And if a question want to come out on capital gain tax, it is from rollover relief. Any question that want to come out from capital gain tax, that question will have rollover relief. ICAN don't use rollover relief to book. Every diet question normally, 15-mark question is coming from capital gain tax, every diet. ICAN have make it their normal practice. It's just like hydrocarbon tax that normally have 20-mark question. So capital gain tax is a no-go area. You must understand it. Question normally come from there. And most of the question on capital tax relate to rollover. So we need to pay more attention to this rollover relief. Now, condition for granting rollover relief. If you want to grant rollover relief, what are the conditions for granting rollover relief? Number one condition for granting rollover relief is The asset on which rollover relief is to be granted must fall in the class of assets for which rollover relief is available. The asset on which rollover relief is to be granted must fall in the class of assets for which rollover relief is available. Who can explain this? What does this mean?
It means that the asset must be in relationship like that: land, building, ship, and shares
Goodwill,
whatsoever, goodwill, and so on.
stock and share. It must be within this class 1 to how many? 5.
5.
It must be within this class 1 to 5. If you sell a motor vehicle, you reinvest it in purchase of another motor vehicle, are you going to use rollover relief?
Yeah.
Are you going to
Yes.
use rollover relief on motor vehicle? No, because it's not in the class
It's not
of the asset.
included.
What about furniture and fitting? Is it included?
It's not.
No. So we need to know those assets that can enjoy rollover relief. That is number 1 condition. Number 2 is the proceeds from the sales of the asset must be reinvested in the acquisition of assets in the same class. The proceeds from what? That in rollover, we have old assets, we have new assets. Old assets are the one that you dispose. New assets is the one that you want to acquire. What this one is saying now, the proceeds from disposal of the old assets must be reinvested. You must use that sales proceeds from disposal of the old assets to purchase what? Or reinvest it in the acquisition of what? New assets. And that new asset must be in the same class. When you sell land and building, you must use it to buy another land and building in the same class. That is another condition. Another one, the asset must be acquired a year before or after disposal. The asset must be acquired a year before or after disposal. That means what this one is saying now is that rollover relief must be claimed within 12 months after the disposal of the old assets. You must claim the rollover relief within 12 months after the disposal of the old assets. Another one, when an asset is lost or asset is destroyed, you now pay the compensation under policy of insurance. That capital sum you receive, which is the sum assured that you receive by way of compensation, you must utilize it in purchase of another asset to replace that destroyed asset or lost asset within what? 3 years. If you don't utilize it within 3 years, rollover relief will not be granted if you did not utilize it within 3 years. Type of rollover. What are the type of rollover that we have? Type of rollover. Type of rollover. We have full rollover, partial rollover, and the third one is called nil rollover. First one, full rollover. Second one, partial rollover. Third one, nil rollover. What is full rollover? Full rollover is available when the sales proceed from disposal of assets, old assets, is fully spent in acquiring the new asset. What full rollover is saying now is when the amount you reinvested in the acquisition of new asset is higher than the sales proceed of the old asset and also higher than the cost of acquisition of the old assets. In full rollover, it arises when the amount you reinvested in the purchase of new assets is higher than the sales proceed of the old assets and the cost of acquisition of the old assets. That is full rollover. In full rollover, you will not pay any capital gain tax at all while you dispose the old assets. You deferred all the capital gain tax to a future period. There is no any capital gain tax liability at all in full rollover. Partial rollover. Partial rollover arises when the sales proceed of from the disposal of the old asset is higher than the amount reinvested or the cost of acquisition of the new asset, and it is also higher than cost of acquisition of the old assets. When the sales proceed from disposal of old assets is higher than the amount reinvested in the purchase of new assets and also higher than cost of acquisition of the old assets. That is what full rollover means.
Partial.
In partial rollover, sorry, that is what partial rollover means. Sorry, partial rollover. I can describe partial rollover in another way. I can say partial rollover arises when the amount reinvested in the new asset is less than the sales proceed of the old asset, but higher than cost of acquisition of the old assets. The amount reinvested in the new asset is less than sales proceed of the old asset, but higher than cost of acquisition of the old assets. The amount reinvested in the purchase of new assets is less than the sales proceed of the old assets, but higher than the cost of acquisition of the old asset. While in partial rollover, you pay part of the capital gain tax now, you defer parts. Part of the capital gain tax will be paid now, while parts will be deferred to a future period. Nil rollover. What does nil rollover mean? Nil rollover arises when the amount reinvested in the purchase of the new asset is less than sales proceed of the old asset. Is also less than cost of acquisition of the old assets. The amount that you reinvested while you purchase that new asset is less than the sales proceed of the old assets, and is also less than the cost of acquisition of the old assets. That is nil rollover. In nil rollover, you don't have right to defer any capital gain tax. The capital gain tax arising from disposal of that old asset will be paid now. You cannot defer it. There is no need to defer the capital gain tax. You are going to pay the capital gain tax now. That is what nil rollover is talking about. That is what nil rollover is talking about. Any question, any issue, any query? Any question? Let me give an example. Land and building. I sell the land and building. I sell it 30 million. The cost of acquisition of that land and building was 5 million. I now sell it 30 million. I now buy another land and building at 20 million. What type of rollover is that? My old land and building. My old land. I sell 30 million. Initially, I bought it 5 million. When I now want to buy another land and building, I now buy another one 20 million. What type of rollover is that? What type of rollover?
Full rollover.
Full rollover.
Full rollover.
Because the amount I invested in the purchase of new assets is greater than what? Sales proceeds of the old asset is also greater than cost of acquisition of the old asset. What if the land and building that I have, I sold it 30 million. Initially, I bought it 5 million. I now buy another land and building that worth 8 million. What type of rollover is that?
Partial.
Any idea?
Full rollover.
Any contrary opinion? Any contrary opinion? Is it partial or nil or full?
Full.
Is it partial?
Partial.
Let me illustrate it again. I have an old land and building. I sold it 13 million. I bought it 8 million. I'm now buying a new land and building. Old land and building. I bought it 30 million. I bought it 5 million. I sold the land and building 30 million. The new land and building I bought was now 8 million. What type of rollover is that? It is partial. Don't let me convince you. Why is it partial? The amount I reinvested, how much am I want to reinvest it? 8 million. Is less than what? Sales proceeds of the old asset. But higher than what? Cost of acquisition of the old asset. Look at another illustration. A land and building. I sold it 13 million. I bought it 5 million. I now go and buy another land and building in a village. I bought that one 2 million naira. What type of rollover is that? An old land and building. I sold the land and building 13 million. When I want to buy that land and building initially, I bought it 5 million naira. That is the cost of acquisition. Why the new land I want to buy costs 2 million naira? What type of rollover is that?
Partial.
Any idea? Look at the seat. Sales proceeds of the old assets in the case of this land is 13 million. Cost of acquisition of the old asset is what? 5 million. Amount invested in purchase of new assets is what? 2 million. What type of rollover is that?
Partial.
No.
No rollover.
No rollover, or called nil rollover. It is called what? Nil rollover. because the amount I reinvested is less than sales proceeds of the old assets. It's also less than what? Cost of acquisition of the old assets. You can see 2 million naira is less than 13 million. It's also less than what? 5 million. That is nil rollover or no rollover. So, any question, any issue? In the absence of no question,
I have a question.
let's look.
Clarification.
Okay.
Yes, sir. Now, if I'm correct, capital gains tax is supposed to be paid on capital gains, and the rollover
Yes.
is going to reduce the capital gain tax liability. So
Yes.
that means the tax we are going to pay is going to be less than what we should have paid, because we are rolling some
Yes.
amount over. We are rolling a portion of it. We are investing it in another asset of the same class.
Yes. Yes.
So in this case now, when we have 8 million capital gains and we are investing 2 million, so now that we are saying it's nil rollover, are we saying that there is no amount that we are defining tax payment on from that portion gain?
Yes, sir. In nil rollover, you don't define any capital gain tax. You will pay the capital gain tax immediately.
But now we have 2 million that we have postponed the tax payment on from the 8 million.
We did not postpone any amount. Since that 2 million naira is less than the cost of acquisition, we cannot roll over any amount. In nil rollover, you are not defining any capital gain tax. You are going to pay the capital gain tax now. That is what nil rollover is trying to point out. Do you understand?
Okay.
So you don't defer any capital gain tax to a future period. You will pay it now in nil rollover. Do you understand?
Yes, thank you.
Yeah. So let's look at one question before we close today. So by next week, we solve more 2 questions on capital gain tax and we move to next topic by next week. By next topic, we are going to move to it by next week, which tax implication of merger acquisition. So let's look at a question you can solve now. Let's solve illustration, examinable question 2. Examinable question 2. Somebody should help us read that. Examinable question 2.
Okay, I'll read.
Oh, yeah.
Question 2. Bolu Nigeria Limited disposed of its building located in Ifo for 7.75 million on 7th September 2015. The building was constructed at a cost of 4.5 million in 2009. Advertisement cost paid for disposal was 280,000. The company acquired a new building at a cost of 6.41 million on 16th September 2015. The lawyer's commission for the acquisition of the new building amounted to 480,000. Required, compute the capital gain tax due.
How do we know that this is a rollover question? Rollover relief question. How do we know that this is a rollover relief question? Because they buy another asset. Because another asset was bought. So that is how we know that this is a rollover relief question. The old asset, how much they sell the old asset?
They sold the old asset for 7.75 million.
7 million.
Why selling the old asset? They incur some expenses called what?
Advertisement cost.
Advertisement cost is example of selling expenses, Abi? Which I
Yes, sir.
mentioned last week. So it's example of selling expenses, which I mentioned last 2 weeks. So you need to calculate the capital gain first on that old asset by saying sales proceed is 7,750,000 less advertisement cost from the sales proceed. You are going to get what? Net sales proceed. Our net sales proceed is what? 7,470,000. From the net sales proceed, you will now less what? How much was the asset was constructed or sold? The asset was constructed in which year? 2009. At a cost of how much?
1,500,000.
Yes, that is the cost of acquisition. So your capital gain will be how much?
2,970,000.
2,970,000. This is the capital gain on these old assets. Since they reinvest it in purchase of another asset, you need to calculate your rollover relief. You need to calculate your what? Rollover relief. How do we calculate our rollover relief? Rollover relief will be if you want to calculate your rollover relief, you said lower of amount reinvested or sales proceed. If you add net sales proceed, you can call it net sales proceed. How much was reinvested in the purchase of new assets? How much?
6,410,000
Plus what?
plus the lawyer's commission,
Which is
480,000.
480,000. So your amount investment is cost of acquisition of the new building plus the commission. It will give you what? 6,890,000. Abi? When you compare it with your net sales proceed, your net sales proceed of the old assets, that your net sales proceed of the old asset, how much is your net sales proceed?
7,470,000.
So between 6,890,000 and 7,470,000, which one is lower?
6,890,000.
6,890,000. That means I'm going to take 6,890,000. Assuming the net sales proceed is the lower, I'm going to take it. But since it is 6,890,000 is the lower, I'm going to take it. I will now less cost of acquisition of the old asset from it. If I less cost of acquisition of the old asset from it, that means my rollover amount is going to be 2,390,000. This my rollover amount. I'm going to less it from the capital gain. How much is the capital gain from the sales of the old asset? 2,970,000. I'm going to less my rollover amount. This is my rollover amount. My rollover amount is 2,390,000. If you less it from 2,970,000, what will be your balance or net capital gain? What will be your net capital gain?
580.
What will be your net?
580.
580. I can call it net capital gain. Net capital gain for better understanding. Net capital gain so that it will not confuse us. 580. So this on net capital gain. Capital gain tax will be how much?
Sir,
10% of the net capital gain. Abi, which is 58. Recognizing 10% of the net capital gain, which is what? 58. Do you understand how we get this?
Yes, sir.
For you to get your rollover amount, you compare lower of amount reinvested and the net sales proceed. Which one is lower? Anyone that you lower, you take it. You now less cost of acquisition of the old asset from it. You get your rollover amount. This is your rollover amount. Your rollover amount, you less it from your capital gain from the old asset, so that you get your net capital gain. So in this question, our net capital gain is 580. So 580. We now apply capital gain tax on this 580. It will give us 58. Ladies and gentlemen, what type of rollover is this?
Partial rollover.
Partial rollover. Why is partial rollover? Why?
because the sales proceeds of the old asset is higher than the amount invested.
Because the amount reinvested is less than the sales proceeds of the old asset, Abi,
Yeah.
Yes, sir.
but higher than the cost
And
of
it's more than the
acquisition
cost of acquisition.
of the old asset. So, ladies and gentlemen, any question here, any query here? So, because of time, I have to stop here. I have a physical lecture in our BI center. So, my lecture is 1 o'clock. So, I will just be going now. So, and where I'm staying is far. So, any question, any query? So, in the absence of no question, we can just call it a day here. So, by God's grace, by next week, we continue from our capital gain and we move to next topic by God's grace next week. Thank you for having me. Have a nice day.
Thank you, sir.